Good evening and welcome to the FITT Show, financial information for today and tomorrow. I'm Bobby P. Kinzer,
And I'm Thomas Doty.
and we are the FITT Show, helping our people get their finances in shape. We are a weekly show on Facebook Live and YouTube, and we're trying to provide information that can help people better manage their money, increase their wealth, and actually pass information on to their friends and family that can even help them with generational wealth. I'd like to welcome everybody aboard, all around the country and in the UK, Holland, and even have people from Australia. So thank you for joining us. How you doing today, Thomas Doty?
Man, it's rough, my brother. This
Man,
up and down and back and forth and
I
all
know.
this craziness. I'm an old conservative dude who likes things the same way, don't like change. But right now, this kind of crazy what's going on. I keep thinking it can't get any worse, but it keeps getting worse.
Well, they say it's like a dog on sandpaper. It's rough, rough. But no, let's get a few administrative things. We just want to make sure y'all understand that we're not fiduciaries. We're not qualified licensed financial advisors. We just financial education instructors providing you with information that you can use. We do not give specific information, personal information, but we do give you information that you are able to apply and go research or even go to a qualified financial advisor to get to actually be able to implement some of the things that we talk about. So the things that we recommend when we talk about the stock market and the stocks that we talk about is only for informational purposes. We do not expect for you to actually go out and purchase the stocks we have. We just use them as examples so that you can get an idea from real live, what we're doing. And we're not saying that what we're doing everybody need to do, but what we are providing you with is information that you can apply to your everyday life. That is our hopes, and that's what we want to do to you. So just hope you click on the like button and the heart button that gives us more traction, and click on as many times as you can because they do not count. They count each click separately, and that helps us reach more people. The other thing is we like for you to place comments in the comments box. If anything we talking about and you have an opinion about it, put it in the comment box. This is where we like to make this an interactive show. We are in a virtual studio. I'm in Bowie, Maryland, and Doty is in South Carolina, right outside of Charlotte. So we like to make this interactive. So use the comment box because that's where we can interact with you. And if you have some ideas or other shows that you specifically like for us to cover a specific topic, please put it in the comment box and we will actually cover that topic. Now, this is our 193rd show, and we only take a break when there's mostly holidays, and that's usually Thanksgiving and Christmas, actually.
And open heart surgeries.
And, and yeah, because we old guys, we never know when we have those emergency surgeries. But this is going on 3 years, and a lot of people have been with us, though, since the start. And a lot of people are just coming on. We're growing our audience. We like to thank everybody. But what we like for you to do is, if you're on Facebook Live, to share it with other people on Facebook so that they can get some, good pearls of wisdom from some of the things we talked about when we're talking about personal finance. And if you're on YouTube, then subscribe to it and tell some of your friends to subscribe to it also. Last week, our topic was spring clean your finances. We talked about a series of things that you need to be doing, just like spring cleaning your house. You get out the old dusted clothes and rugs and things like that, beat the rugs. You need to do the same thing with your finances. So we hope that was very helpful. But this week, it's been a crazy, crazy week since the last week we talked to you all. So we thought this week would be a good topic is the fear justified? And I know some of you all who have 401ks, 401as, 403bs, and other, uh, uh, retirement plan, IRAs, or in the stock market. I know you wonder what in the world should we be doing, and we're just going to discuss that and hope that we can calm you down and get you to feel very comfortable with your financial situation. But with that, though, we start from the top of the show with our favorite subject, the stock market and cryptocurrency. But we're going to begin with the stock market.
Yeah, Bob.
Should we look? Should we close our eyes?
No, because it's not really that different from last week. It's just all the gyrations within this week have been crazy. I mean, it's a 2,000 plus, and there were some big negatives. It's just been absolutely ugly this past week. And tariffs are on, tariffs are off, tariffs are delayed. You didn't pop up the screen, Bob.
Oh, it didn't come up. That's what happened. Don't tell me this thing is acting crazy. It's got its own mind, though. Let's see if it come up this time. It's not coming up, though. You're just going to have to talk to it on the fly.
Okay. Well, fortunately, it like I said, not much has changed from last week. It's just been crazy gyrations, all based on whether or not when the tariff's going to start, who they're going to be against, and it seems like he's backed off now. But the market had a big drop again today. It was up huge yesterday, and so for the week, the S&P is down about 129 points, about 2.4%, and Nasdaq is down only 1%. I'm telling you, it's been some crazy gyrations. Microsoft for the week is actually up 8 points. Apple's down 13. And a lot of that is because Trump is playing chicken with the Chinese people, and they keep taking turns raising how much the tariffs are going to be for the other country. And Apple does, a lot of their stuff is made in China. They're trying to shift some more of it to India, but a lot of their stuff's made in China, and they ship a lot of stuff to China. So Apple's really taking a big hit. Nvidia's up 6, Google's up 2. Pfizer actually dropped a couple points. That's a little scary because usually it's pretty stable through these things. And Nvidia's up 5. So I have no idea what's going to happen. I don't think anyone does. And the advice I'd give you, if you've invested in the stock market, you've put money away that, with your risk level, because on days that the market is gyrating like that, I don't even check. Like on normal days, I might check a couple times during the day. But when it's going crazy like this, I don't even look at it because, number one, I'm not going to do anything. I'm not going to make any transactions just because the market's going up or down. And so there's really no need for me to check when it's going crazy like this because nobody really knows what's going to happen. And I'd recommend that to you as far as not getting caught up in, it's up 500 points. It's down 500 points during the day, because unless you're going to make a transaction, it doesn't really matter. And we always tell you the money you invest should be in for the long play. And so don't get caught up in these day-to-day craziness. And I tell you what, it is crazy. And there was a little bit of good news. The inflation came in a little lower than expected. So that's always good. But there's just so much turmoil with these tariffs and with Russia and China going at it. And I believe he backed off because usually the U.S. is seen as the safe investment place. Our treasuries, that's where a lot of people put money because, one, they are safe and it's something that everybody has come to rely on. But that's not happening now. And so that's kind of saying people don't have as much trust in the U.S. as they normally do. And with the guy in charge and the way today we're doing tariffs. Well, are we going to hold off? Tomorrow we're doing tariffs. Next week. That's kind of created some fear on people in other markets to not invest in U.S. assets as much as they had in the past. So I'm not sure how that's going to play out. I'm not sure what he's going to do to try to give stability to this situation. I have no idea what that guy's going to do. But all we can tell you is take the long play. Don't do anything rash. And we've talked about that a number of times. Things are going to be crazy for a while, and we're only in the first couple of months of this guy's administration. So
did you mention how much the market is down, or no?
Did I mention what?
How much the market is down, like the NASDAQ and the Standard and Poor's?
Yeah, if we had the chart, I could just show, just from the year-to-date chart, kind of shows the year-to-date is really, I mean, it's really kind of crazy because everything is down. S&P is down 10%.
Yep.
Year-to-date. Bob?
Yes.
Oh yeah, NASDAQ's down 15%. And of all the stocks, Apple's down the biggest at 24%, and Pfizer's down 19%. So it's
and the video, man, is breaking my heart. The video is down 19%.
Year to date, yeah, it's down 19%, and Google's down 18%. But I mean, they're all pretty much in step with the NASDAQ. And with this uncertainty, nobody's going to be buying any AI or investing in AI or investing in anything new when there's fears of a recession, there's fears of a slowdown. You don't know what effect the tariffs are going to have on your business, whether it's going to stop consumers from buying because the price will be too high. It's just, there's just so much uncertainty, and that tends to hit those tech stocks the hardest. That's money that companies cannot spend as far as continuing to invest in AI. So yeah, we're in some crazy times right now.
Yeah, just want to give you, we can't pull up the screens today. We have technical difficulties, so forgive us with that. But just want to give you a little idea on the cryptocurrency market. The cryptocurrency market as a whole is down by 5%. And the Bitcoin, dope, is down to $79,529. Remember, at the beginning of the year, it was at $105,000 per Bitcoin. So you do the math. That's a big, big drop. And all the other ones have, dropped. But Ethereum has dropped the most. Ethereum has dropped about something like 17%. Don't know what's making that drop so bad.
Wow.
But that's where we are, man. Everything's taking a beating from the chaos. And the one thing they say the market doesn't like, dope, it's chaos.
Oh, for sure. Uncertainty.
The market does not like uncertainty. And guess what? Neither do most people, but the market definitely doesn't like uncertainty. And so we're in some really, really crazy times. And that's why, today our subject is the fear justified? Because a lot of people have 401k plans, dope, or just individual stocks or IRAs, Roths. All these things are affected by the stock market. So everybody, have some play into the market and what's going on. So let's kick it off though. What is this fear real?
Well, the big, what should you do now if you're a stock investor? I mean that's really the question. Everybody's wondering what should I do? And you got all these economic worries related to tariff announcements. That's just killed the stock market to its most bearish level in more than 30 years. That's a long time. And historically, sentiment extremes have tended to resolve the stock market, moving higher over the following 6 to 12 months. So in the past, staying the course in U.S. stocks when it's crazy, has been the right move. Right now, we're not so sure. So that's what we're going to talk about tonight.
Yeah, I mean that's real talk, though. And the recent, drop poses difficult questions. What should I do? Is what people are asking. Faced with the declining portfolio values, though, it's a natural instinct to want to react to protect investments from further market declines. Now, the short answer of what should I do to this question is to act calmly and rationally. Like prudent investing is about cool-headed decision making. During times of market volatility, investors should focus on their time horizon and asset allocation. And don't we talk about that all the time, right? What is your goals? What is the time? And then what is, are you diversified? What is your asset allocation? Because good investing involves deciding on a long-term strategy and sticking with it. I know y'all heard us talk about that, but the reason why we keep talking about it because it's important. Now, history has demonstrated that sources of market uncertainties are always different. There's no one same thing that happens when the market goes crazy. Now, if we can rely on history, short-term panic envisions a doom and gloom scenario. Remember that, y'all. Followed by stabilization and eventual growth. Now, in times like this, the global markets may sell off because everybody's trying to take their profit. We're thankful for, things crash, and stocks and bonds usually reprice themselves, and economic growth, is likely, diminish. But do y'all remember the Great Recession in 2008 and 2009? That was, let's fast forward to the end of 2019, right? You know about the Great Recession, but that from 2008 to 2019, that 10-year period saw the longest bull, meaning increase in the stock market in U.S. history. Now, I know past performances is no indicator of future returns, but it gives us some kind of solace, though. So, why don't you start us off with tell us, what about these uncertainties in the market?
Well, I mean, there's no way around it. This stock market is experiencing historical uncertainty following all these announcements about tariffs. And that's creating fear on everybody's part. I mean, if you look at it from a company's situation, nobody knows what to do, whether they should produce more, produce less, produce it here, produce it there. They don't know who's going to absorb the cost increase, whether the exporter is going to absorb the cost, whether the end consumer is going to absorb the cost. And you look at all these different scenarios, nobody really knows. And this stuff has happened so fast, no company has been able to adjust and kind of make arrangements to, I can see it very easy to say, bring manufacturing back to the U.S., but you don't just throw a plant up in a couple of months. And so this has just created a lot of fear among everybody. And you got to believe the consumers are going to absorb some of the costs. And so that would kick inflation up, and that would make inflation go crazy hot. And so if there's nothing historical ever to compare to this. There's been two times when the U.S. has tried to really go full force on tariffs, and both times created in worldwide economic crisis. And so that's the only thing history tells us. But with what's going on now, nobody can really tell because it's so widespread. It's so, I mean, the simple formula they use to calculate the tariffs, I mean, I think my 9-year-old grandson could have came up with that. So it's really kind of crazy. And so if you look at, sentiment and how people are feeling, everybody is really, really nervous about this. More people are looking at, are researching recessions, researching bear markets, looking at Google, doing Google searches on those items,
right,
and trying to figure out what should I do, what's coming. So everybody is afraid. Companies don't know what to do, where to produce, what the results of all this is going to be. And so, yeah, everybody's really, really scared, Bob.
Guess what Apple did, man? Apple had just shipped on 3 different ships from India, something like it was $600 million worth of phones, because actually some of those are made in India, and they're trying to go around the tariff embargo in China, right? And they
they upped their production in India big time.
Yeah, so they try. So people are trying all kinds of different things. But Dope, can you just take a minute and share with the audience today, like, what are one of the things that you did the other day?
About
Staples.
oh, I told Bob, I'm so nervous. I'm kind of nervous about this kind of stuff. So I went to Costco and I bought up a whole bunch of stuff. And I'm
But
making
not just
sure,
anything.
yeah, I bought stuff that you're gonna need: toilet paper, paper towels. I bought canned foods, a lot of tuna. I bought frozen fish, frozen fruit, frozen vegetables, stuff like that, just in case this thing really goes crazy. And I mean, it's not like I'm risking anything because I will consume all that stuff at some point. But if something crazy happens, I'll be prepared. I've made sure I got money around just in case something, the banking system shut down. Bob always talks about back a few years ago when they talked about shutting the banking system down. I'm just really leery. This is unprecedented times we're having now.
How much did you spend on
I spent
Staples?
$500 at Costco. Just
I don't blame you though, because we did a little bit of that too, man.
I mean, there's no reason not to. And if nothing happens, it ain't like I bought anything that's gonna spoil. So
Right, right. But that was good.
I'm
Good
just
thing.
nervous. I gotta admit, I am truly, truly, truly nervous about what's going on.
Right. But I think that's a good idea though, because the price is going to be going up, and you're going to need those kind of things. That's what you call what do you call it? Those staples, the stalwart things,
Things that you're gonna need
the
anyway.
essential things. You're going like toothpaste, right? Like toothpaste, deodorant, stuff like that. You might want to stock up on it now because they're going to be going. I mean, the way it looks, the prices look like they're going to be going up on those things though. Anyway.
No doubt about it. No, and think we don't really know right now what's going up, but we know what he's put tariffs on just about every country in the world except Russia.
Right.
We do know things will be going up, and you need to look at where things are sourced from. A lot of people are out buying computers and a lot of things that come from China, because he's put like 100% tariff on things from China. They keep going back and forth, upping the ante on who can charge the most tariffs to each other. So, and so much of what we consume comes from China because it's so cheap to make it over there. I mean, China.
No, 70% of the things, 70% of the things we import are from China.
Yeah. So go figure that out.
I just thought that was a good idea to share. We're not saying everybody, and make sure you have just some extra cash around. And for you people who listen to this, who are scoundrels people, that I only got $5 in my house, so don't think I'm talking about a lot of cash. Wink, wink.
Well, I got a Smith and Wesson, so if
yeah. They got to see two people, and you know what? I got a guy named Ruger in my house, and another guy named Pump Shotgun. So I wish they would, but no, it's all seriously, y'all. That's another idea about having protection. But anyway, no, I want to talk about now. I want to talk about, is the fear justified? Now, to the degree to which the market fears are justified really depends, and I know this is Captain Obvious, on the U.S. tariffs and the subsequent, what Donald Trump called reciprocal tariffs from targeted nations that affect economic growth, inflation, and geopolitics. So let's take a brief look at each. Economic growth. Historically, tariffs have created demand headwinds by functioning as a tax that can lead to a slowdown in consumption. People pull back, they don't spend too much, they don't get to pick big ticket items, they don't remodel the kitchens, they don't buy a new car, they don't, go on major trips. And this can slow down the market, right? Because we need people to consume, to buy the prices, to buy the products at the companies, which in return, the money is supposed to come back to us, help the market. Now, this is arguably the biggest threat posed to the latest tariffs is the growth. Now, some people talk about inflation. That's the third measurement that, the head of the Federal Reserve, Richmond, recently warned that tariffs could raise inflation, the prices, like what we're talking about. But history has shown that tariffs do not necessarily drive sustained inflation. For example, inflation decelerated in 1971. I think that was Jimmy Carter, right? And in 2002 and 2018, it decelerated when they implemented tariffs. So nobody knows. But the best thing you can do is try to position yourself. And then the geopolitics, which is the major one, the impact will depend on how targeted companies react to U.S. tariffs. China already starting to kick back, and the European Union is now talking about starting to have this tariff war on tariffs. And China has already, increased their tariffs. So trade retaliation from Europe could be swift with others, and others could potentially follow suit.
Yeah, and Bob, it's no question recession fears have spiked, and as you just talked about, when there's a fear of recession, people don't make any big purchases. They don't buy cars. They don't take vacations. And if you look at some of the analysts' price target changes, I mean, the hotel and vacation industry has taken a big hit. All the automakers have taken big hits because, again, people aren't going to buy cars if they fear recession. And more importantly, if there's a huge tariff attached to it. And when people start buying, companies start cutting heads, which makes it worse, and the situation gets worse and worse. And that's where we are now. That's where we are now. And Google has I mentioned before, a trend search where they look for people looking at the word recession. And it's reached this top percentile in March of 2024. And this data goes back to the early, like in 2004, when the data first came available. So nobody really knows if a recession is coming. I mean, the landscape is changing every day, depending on whether they push back going to push back the tariffs or go ahead with the tariffs. Nobody really knows. So a lot of this is depending on how all policymakers respond, and nobody really knows. But the market ain't waiting to find out. They're acting like we're in a recession, and we've gone a long way toward pricing in a recession. So that's what it looks like.
And don't want to remind people the definition of a recession is 2 consecutive quarters of a downturn in the market. 2 consecutive quarters is what is considered a recession. But and when George W. Bush, man, it took him, I think it was like some crazy 8 months. It was more than that. It was something like 12 to 14, 16 months before they even declared that it was a recession. We were in a recession, but they just didn't want to say it. But the one thing about recession, people will know because you'll start feeling it in your pocket. And the reason why we horning in on this today, you all, because we know a lot of people have 401k plans, savings plans, and in the market, individual mutual funds and things like that, Roths and things like that. And I know you're kind of concerned with what you should do with it, but so what's the proper course of action? Let me just talk about that. History shows that selling in periods of extreme market bearishness often has been a mistake. Once bearishness has reached an extreme, it's often too late to shift to bearish positioning in your portfolio, especially if you take the long-term review, like now. If people now panicking, trying to get out, a lot of those, the market has already dropped down, 10% on the Dow, at least 15%. So, I mean, right now, do you want to realize that loss? Now, let's look at the subsequent 12 months of the S&P index. 500 index. Following periods of extreme bear markets to capture a well-rounded view of bearishness, there was an index that was created to be able to measure the economic policy uncertainty and consumer confidence. And on this measurement, the bearishness recently reached a near peak, approaching the multi-decade high in 2020. That was the highest in 2020, the bear market, around the time of the COVID. Now, since 1990, when the negative sentiment had reached similarly extremes, forward 12 months returns for the S&P index had averaged, check this out though, more than 30%. 30%. Now, we're not saying this is what's going to happen. I'm just saying that be careful in trying to jump out of the market or move all your money just at 100% in cash, because history has shown, 11, 12 to 13 months, it comes back.
Yeah, you aren't going to win if you try to time the markets. Try to time the market. It's just there's no future in that. Trust me. Now you get these spikes in recession searches, and sometimes they are in line with major recessions and steep bear market like we had in 2007 to 2009. Stocks dropped sharply. And so, we could be on the verge of a big bear. And there have been 3 really big bear markets in the roughly 7 decades, okay? There's one in 73, 2000, 2007. And outside of those 3 big ones, stocks have always risen in the year after striking bear territory or getting even close to bear territory. But in the big bears, when they have those big bear markets, stocks went on to lose 30% on average after initially crossing into bear territory. So how do you figure out which type you're in? Whether it's going to be one of the little ones or one of the big ones? Well, you don't. But historically, there's been a positive relationship between the speed of the bear and the forward returns. The quicker the decline has been, the bigger and more rapid the upside bounce has been. Now, that's just based on statistics. So the big bears were marked by taking a long time, 315 days on average, to reach bear territory. By contrast, this recent decline compared to past bear market has been almost the swiftest 3 in history. So we don't really know, but there's some good things about this one because it happened so quickly. But again, history may repeat itself and it may not.
So one of the things me and Dote always talk about is investing for the long term. And in these particular situations, it's so important to not just look at this short term, but also look at the long term. Now, the losses you see in your retirement account are only paper losses until you sell. Remember that. They're not realized losses. Now, panic selling, stocks and those losses, historically, some of the best days of the stock market performance has followed some of the worst days. No one can predict the market, as we talk about. No one can tell what direction it's going. And pulling out of the market due to an emotional reaction can lead to missing out on gains on the way up. Now, a down market can offer buying opportunities, but no one knows when the market has reached the bottom because no one can predict that. It's 4 economic cycles: the peak, the down swing, the bottom, and the upswing. That's just how it goes, but no one can predict either one. But you don't want to be getting out on the downswing because you don't know when the bottom's going to hit, and you don't want to be, jumping out and it's still losing, and you can lose even more. But downturn markets offers buying opportunities, right? But no one knows when the market will hit the bottom. But purchase decisions should be made rationally based on long-term strategies. 1928, the standards S&P 500 index had a return annually of about 10%, but annual returns varied widely. Over 97 years, there has been 65 positive years, 30 negative years, and 2 flat years. Check that out, though. In 97 years, there's been 65 positive years and 30 negative and only 2 flat. Now, during this period, there has been 24. During this period, there's been Standard & Poor 24 Standard & Poor's 500 bull markets, not counting the current bull market that we just came out of. So let's get that, though. 500 bull markets and only 23 bear markets, meaning when the market goes down.
I think it's 24 bull markets, Bob. 24 bull
I
markets.
said 500. That's the
24 S&P 500
I
bull.
meant to say 24
bull markets.
Thank you very much, though. And 23 bear markets. An average bull market lasted 1,102 days and had a positive return of 121%. And the average bear market lasted 340 days. Now that's what I want to focus on, those differences. 1,102 days the bull market lasts, and only 340 days, and had a negative return of 36%. Put simply, bull markets have lasted longer than bears, and bull gains have substantially eclipsed losses.
Yeah, that's good to know. And I mean, if you invested in the stock market right now, you got a lot to think about right now. Okay. A lot of the bulls have been scared off by all these recent events and this craziness. And I mean, there could be more near-term volatility. There's going to be more near-term volatility in either direction. Nobody really knows. But again, all you can look at is what's happened in the past. And such periods have often shown to be a very poor time to sell. You don't want to sell at or near the bottom. Over the long term, maintaining stock market exposure as part of a diversified portfolio has historically worked out well for investors. We always talk about the average return being around 10% of the S&P. That includes all the bears and recessions and all that stuff. So in the current situations, investors got to look at their tolerance for risk, because there's going to be risk going forward. Refocus on their long-term and short-term goals. You know, if you got something you got to pay short-term, you need to make sure that money's not invested in the market. Act calmly and rationally. And if you are uncertain with what to do, talk to a financial expert, either a trusted advisor or a consultant who can help you navigate through this volatility. He can help you make sure you're diversified. He can make sure your portfolio reflects the amount of risk that you're willing to live with. That's very important. If you say, okay, I'm willing to take X amount of risk, you won't be as bothered when there's a downturn as if you don't think you're taking risks and the market is going down real fast. So act calmly, take the long play, and this too shall pass.
Yeah, and we just wanted to address this because I know we talk about different things, but a lot of people definitely are feared because once again, uncertainty brings chaos. But I hope y'all we provided you with some information that can make you feel a little bit calmer. That's why me and Dote always talk about making sure you have the right asset allocation, making sure that you have a diversified portfolio, that when things like this can happen, it will be a shock, but it won't be a major shock. You'll be able to absorb some of the shock. Because we're not trying to give a pie in the sky and try to tell you, oh, don't worry about nothing. No, we're just saying make sure, and whether it's a recession or not, we talk about this all the time. You must look at your personal financial portfolio and adjust it accordingly. You need to, look at your spending. things that, they call it a crisis budget now. Crisis budget is when you just budget for the essential things, and start, cutting out some of those other purchases that can just eat through your savings. Because if inflation does go up, remember, it would take you more money to live on than than you were. So just take that in mind. And Kitty says, "Happy Thursday. It's been a crazy 2 days." Yes, it has been, Kitty. So, Dope, let's go to the summary and takeaways of today's subject. Is the fear justified? Oh, yeah. I don't think I can't bring them up visually, but let's just go through them, Dope.
Okay, you got the first one.
Oh, okay, good. Okay, the first one is uncertainties is inherent in investing. That's his part nature of investing. No one knows, even the big boys, Vanguard, Fidelity, T. Roy Price, Bear Stearns. I mean, they went under. That tells you they don't know. Where did I pull that one from? But Goldman Sachs. None of these people know. They just use matrix from the past and hope that can help you in the future. But uncertainties is inherent to investing, and that's why we say make sure you understand your risk tolerance.
Yeah, and knowledge calms uncertainty. The more you know, the more you understand, the better off you're going to be mentally, because you'll have, not that you know what's going to happen, but you'll understand what's happening. So you might want to understand, do some work on the tariffs, how that's going to affect the specific things you buy. You may want to look and see where things are sourced. If it's something you buy from a certain country, you can expect the price to change. There's a lot of things you can learn about that's going to help alleviate some of the fears that you have about this uncertainty and what's going on, because you'll have an idea of what's happening and you'll have a better understanding of what's coming. And when it does come, you'll know what it is. Okay, not that you can do anything about it or predict, but you just feel better when you know and have an understanding.
And can't say it enough. Think long term. This too will pass. And if good oil is willing and the creek don't rise, that's my aunt used to always say, man, that's some old stuff right there. Timing, we living longer, you all. So, consider the long term. Look at the short term. Don't get me wrong, but also look at, in conjunction, the long term. Now, Kitty just stated, Dope, she had a big loss in 2 days. Yes, I made changes. She made changes to her TSP and her 401, that's a 2-0 price plan yesterday. More bonds now, less stocks. Kitty, I just want to remind you, be careful, because bonds a couple of years ago, now bonds is supposed to work inverted. When the stock market goes up, bond prices go down. When stock prices come down, bond prices go up. But a couple of years ago, we had an inverted bond. When the stock market went down, bond prices went down too. So,
and
yes.
the other thing with bonds is interest rates. As interest rates go down, bond prices usually go up, right?
Right.
And the opposite, as interest rates go up, bond prices go down. And
right.
So right now, you got to watch what's going to happen with interest rates to see how it's going to affect bonds. And that's the part that's a little tricky right now.
Because like I said, we had an inverted bond issue when the interest rates went down. Like you say, bond prices go up, but it didn't. Bond prices went down too. So, and Kitty, I know you got a TSP and a T. Rowe Price 401k, and you might want to consider the PSP maybe having some of the G fund, which is, the lower risk and safe and preserving some of your principal there. because so it's not just about, but you should seek financial advice. But I'm just saying, be conscious, because right now, we don't know what's going to happen, and you could trigger something, and it could affect your whole portfolio. Because if you moved out of growth stocks into bonds, right, you could no interest rate changes now, right? No, but they're getting ready to make 2 more before the end of the year, and they're going to make 2 more next year. They've said that, Kitty. So it could possibly. Okay, good. You have so, and like I say, I don't know your personal situation. I'm just saying, be careful, because bonds sometimes have the inverted effect, and you don't want to. With so much uncertainties, sometimes it's best to hold until we see what's happened. And I know some people say, yeah, but then it might be too late. But like I said, what has already happened, the market done dropped, 15% in NASDAQ. It's trying to move now, you move too late. So just consider that.
Yeah, again, and that's the most important thing I want to leave you with is don't panic. Don't make a panicked decision, because that probably will not be a good decision. You need to have a well thought out plan. You need to have a diversified portfolio. You need to understand your risk tolerance. And if that leads you to make a change, then you make a change. But to make a change in reaction to what's going on, it is probably not going to be a good move for you long term. Because if you get out, you don't know when to get back in. There's no roadmap for, hey, now is the time. Now I already know things are going to go up. So take the long play, do your work, your research that you need to do, and don't panic. Don't make a panic decision.
So Kitty said, 1 month I lost $80,000. Remember what I said earlier, Kitty?
You lost it to yourself.
You didn't lose any. That's unrealized loss. That's not a realized loss. Loss is still was there. That's not a realized loss. And remember, in 2001, the dot-com bubble with George W. Bush, the market went down 40%. 40%. And I lost more than that. But in 13 months, it came back 40% and another 25% over the 40%. The COVID economic, the market crashed in March of 2020. It crashed. It was the quickest return. It crashed about 34%. And some of y'all didn't know that because you wasn't paying attention. It crashed, though, by 34%. It came back in the quickest return in the market. It came back within, I forgot, was it 24 or 34 days? It came back fully, the biggest return just in that little period. So yeah, Kitty, I know what you're saying, but don't panic, because until you take that stuff out and move it, then you realize the losses. Those are unrealized losses. So, but in this other thing, and I'm gonna leave this alone, Kitty, you may have lost 80,000, but I know you made a whole bunch more, and it's still looking good. So don't be panicking about the 80,000. But only you got to sleep at night. So we ain't telling you what to do, but just be cautious of what you're doing. No, let's want to say to the roll call, all these wonderful people that stay on and be with us. We have a great bunch of people today. Motor Steen from Lexington, South Carolina. Joanne Skinner. Oh, man, is all 3 of my sisters on here? Oh, all 3 of my sisters. Nolia, Linda, Gloria. Remember my dad used to say that? Arthur, Steve, Nolia. He named all 7 of us, though, until somebody came. What's up, my sister? Thank you for being on. I love y'all so much. Thank y'all for being there for us. My brother, Carl Chapman, how you doing, man? I hope all things are fine with your sister. I hope she's doing well. Now, Dodie, we love you so much. Thank you for being on now and giving us support. Rodney L. Madison Sr., thenotexperience.com. If y'all haven't, please go out there to notexperience.com and check out another viable investment opportunity, especially in these changing times. It's always good to have a diversified portfolio investment opportunity. Hey, Doe, we got Deborah here. Deborah Doty. What's up, Deb? How you doing, girl? Glad you're on with us. Thank you, everybody, for being with us. And, oh, we got Mo Better. And who is that, Dope?
What's the name?
Mo Better. Moebetter. Laugh out loud. What's up, Mo Better? Let us know who you are, Mo Better.
I can't see the face.
Yeah, I can't see the face either. But Mo Better, thank you for being with us. And as always, Dope, I'm going to leave you with the quote of the day. Y'all take heed of this quote. This comes from the Robert Nesta Marley. In other words, Bob Marley. Money is numbers, and numbers end. If it takes money to be happy, your search for happiness will never end. Do I need to repeat that, though?
Yeah, that's a good one.
So take that, you all, and put it in your pipe and smoke it. All right. Thank you all for being with us next week. 194. We heading to 200 shows. Hey, Big Bob, and I can't wait to see you at the Bowie concert soon. All right, Mo, thank you for being on here. Yeah, this weekend is the Bowie concert, ladies and gentlemen. For the people who are local, we're doing the Bowie Wine and Festival Taste. Put it where? Laugh out loud. Oh, you funny. At the Bowie Town Center this weekend, Saturday, Sunday, 24 bands, 12 bands a day, 2 stages. We block off the Bowie Town Center, and we have over about 75 vendors selling all kinds of stuff. A lot of black vendors. Come support them, you all. We've got some great local bands, and it's free. 11 to 6 p.m. Saturday and Sunday at the Bowie Town Center. Hope y'all be there. One more message, and I'm going to remind you of this. May 3rd, Big Bob, Barnes & Noble at the Bowie Town Center is doing a book signing from 3 to 5 for yours truly, Big Bob's book, The Other Side of the Hoop, The European Basketball Experience. Mo Better, who are you? This boy talking about free 99. What the, Mo? Will you please disclose who you are, Mo? I think I know who this is, though. I think I know who he is. He's in the witness protection program, though. All right, ladies and gentlemen, thank you all. We see you. Hope the rain holds off. You're right, Kitty, but it might rain Saturday, but it's not going to rain Sunday. So come on out Sunday, y'all, and hear some great. Bring you lawn chairs. And we love you all. And another great show, my brother. Have a good week.
You too. Good. Take care.
Happy birthday, Kitty. That's the birthday. Happy birthday to Kitty Cheney on what? That's my birthday. Was Sunday or Saturday, Kitty? Put it in there real quick. Happy birthday, Kitty. You're just a young thing, girl. All right, you all have a wonderful Kitty. Go ahead and put it in there so we know what day is your birthday. I don't want to be saying it's Saturday or Sunday. Okay, she ain't put it in. All right, you all have a wonderful, wonderful week. And we talk to you next week. The FITT Show. Have a good one.